Hello, Assalamu alaikum students. This is your teacher, Azka. And today we are going to solve O-levels of Excel GCSE accounting paper. Um, and I guess this is accounting paper. Oh, okay. So this is paper one, Introduction to Bookkeeping and Accounting. Code is for AC1. Paper one, we have 2 hours to complete this paper. Um, and This is Pearson Edexcel International GCSE. Okay, so let's start. Okay, so now first of all, I'm going to start the video from the end, from the very end of this part. So I'm just going downwards. Okay, so we have this question number 18. Okay, so now let's read the question. So on 30th September 2022, the bank columns SAMs of cash book showed a balance of 2640. So this is a debit balance, which did not agree with his bank statement balance of 4079 credit on the same date. Okay, so he discovered the following differences. Direct debit 148 had been entered in the cash book as 184. So as you can see that this is the fault, this is the error which basically done by the by the business. So it means that we will be rectifying it with the updated cash book. And bank charges 182 had not been entered in the cash book. So I think first of all we have to find out the balance in the updated cash book. So let's see. First of all, we have the positive balance in the cash book, and this is 2640. So a direct debit 148 had been entered in the cash book as 184. So 148 minus 184. So as you can see, um, that the direct balance amount was 148, and we entered in the cash book as 184. So what does it mean? It simply means that we subtracted $36 more, which we didn't supposed to do. So it means that we have to add back $36 in the debit balance of the cash book. Okay, and we have the bank charges, which is 182. So we haven't deducted this. So it means that we have to deduct it now, which is minus 182. So altogether we have 2640 add back 36 minus 182. So we have the balance as per the updated cash book, which is 2494. So we have done with this part. Okay, so now we are going to find out the to make the bank reconciliation statement. So first of all, let's see the second adjustment. So a check received 260 and check issued. So a check received 260 means that this is the uncredited checks, and checks issued totaling, which is 1845, had not been added in the cash book but had not yet been processed by the bank. Okay, so this is basically our unpresented check, and this is our uncredited check, because we received the check which is $260. Okay, but had been entered in the cash book but had not yet been processed by the bank. It means that you already recorded 260 and 1845, but it is not processed by the bank. So it means that this is the mistake from the bank side. So that's why we have to rectify it, or we have to make the bank reconciliation statement. So this check received, which is $260 from your customer, so you had recorded it, but bank processing it yet, it is not processed totally by the bank. And this one, $845 is basically the unpresented checks. You have given this check to your supplier, but he didn't showed up in the bank, so that's why this is in the process. It is not deducted yet from your bank account. So balance as per cash book, which is 2494. So first of all, we have to add the unpresented check, which is 1845. We have to add 1845 in the updated balance, bank balance as per cash book. It is 1845, and we have to deduct the unguaranteed checks. So now we have the balance as per the bank statement, because we basically trying to find out the balance as per bank statement. So if we say that the balance in the cash book is same as the balance as per bank statement, so because these two things bank didn't record, okay, so unpresented check, basically it is not deducted yet, so that's why we have to add it back. And these outstanding lodgements is basically you already added in your cash book, that's why we have to deduct it. So after that we will be receiving the amount which will be on our bank statement, so which is 407 Okay, so we have done with this. So now we have to write that state two features of direct debit. So first one is the use of recurring payments, and the second one that it can be used for the irregular payments. We have the next question, B part. So Sam currently maintains only a cash book. So Sam currently maintains only a cash book to record his bank transactions, business transactions. So he has decided that he should maintain a full set of accounting records in the future. Evaluate two benefits to Sam of maintaining a full set of accounting records. Okay, so Sam currently maintains only a cash book to record his business transaction. He has decided um, that he should maintain a full set of accounting records in the future. So evaluate two benefits to Sam of maintaining a full set of accounting records. So this is question. This is for the question. This is basically 5 mark question. So first of all, let's find out that what would be the benefits if we are using a full set of accounting records. So accuracy of financial position. So having a clear understanding of business financial position is vital for making informed decision. A full set of accounting records will provide Sam with the necessary information to assess the business strength, weaknesses, opportunities, and threats. This will enable him to make strategic decision about investment, funding, and resource allocation. And the second advantage would be that better financial control. Maintaining a full set of accounting records will allow Sam to exercise better control over the business finance. This will help identify areas of inefficiency, track expenses, and monitor cash flows. Overall, maintaining full set of accounting records is essential for Sam business. It will provide him with accurate financial information and better control, enabling him to make informed decisions and drive the business growth. So these are the points which I supposed to write in this 5 mark question. So now let's go back. We have this question number 17. Yes. So Carson depreciates his computer equipment using the Switzerland method at 20% per annum. A full year's depreciation is charged in the year of purchase, but none in the year of disposal. So on 1st September 2021, the balances were uh, computer equipment at cost, which is 16,800. Computer equipment provision for depreciation is 9,200. So on 1st May 2022, the computer equipment originally purchased on 1st March 2020 for 3,600 was sold for 1,950. So prepare the following accounts for the year ended 31st August 2022. So first of all, we have to prepare the provision for acquisition account. So we know that we have in 2021 for September, we have this balance of provision, which is 9,200. So that's why we have to write it on the credit side. because we know that the nature of the provision account is carried. Whenever the provision is increasing, you will be carrying it. So we have this balance on 200, so it will be carried on this side. Okay. And also, as you can see that the computer equipment which we sold out, we have to decrease we have to decrease its provision for depreciation account. It means that first of all, we have to find out a depreciation for the sold equipment, because as you can see that we have this depreciation for all types of computer equipment which this business has basically, but we have to find out only the depreciation for the sold asset, for the sold computer equipment. So how can we find it out? So as you can see that we have the cost of the computer equipment, which is 3600. It means that we can easily find out its depreciation, because we also have the rate of the depreciation, and we are using the method which is straight line. But one thing we have to consider is that we have to identify the dates carefully. So as you can see that we are preparing this account for year ended 31st August 2022. And just remember this policy that full year's depreciation is charged in the year of purchase, but none in the year of disposal. So we basically purchased this on 1st March 2022 to 2020, and we sold it out by 2022. So 2020 and 2021. 2020 and 2021. So this is basically 2 years, because in 2022 we sold out this computer equipment, and the depreciation policy says that you should not charge a depreciation in the year of disposal. So that is why we only have to find out the 2 years depreciation. So 3600 is the cost. 3600 multiply 20%. Okay. So 3600, sorry, I have written 360 instead of 3600. So 3600 multiply 20% divided by 100. So we have 720. This is 3600. So 720 is the depreciation for the 1 year. So 720 multiply 2, 720 multiply 2, because we are finding out depreciation for 2 years. That's why. So we have 1440. So it means that in 2 years, this asset has depreciated by 1440. So that means this will be debited, because we have sold it out. That's why we have to decrease its provision. That is why we are debiting it. Okay, so now let's see that in income statement, how much depreciation we should transfer. Because in the income statement, we know that we will be transferring the depreciation only for those assets which we are using right now, not the sold one. Okay, so as you can see that we have the cost of the previous equipment, which is 16,800. But if you see that we have sold out one asset from it, and its cost was 3,600. So if we just deducted 16,800, 16,800 minus 3,600, so we have 13,200. So we know basically that we are using the straight line method. So we know that in straight line method, the depreciation amount will be same for each year. That's why we will only multiply it with the 20%, because this is the rate. Multiply 20 divided by 100. So we have 2640. It means that in this year, 2640, sorry, not 00, 2640. So 2640 is basically the depreciation which we will be charging in this year's income statement. We will not be charging this 1440 because we only need to decrease the depreciation for the sold asset, and we only need to record in the income statement the depreciation for those assets which we are using right now. We have the assets in present. So the amount for these assets which is 13,200 and its depreciation is 2640. So this is basically the income statement. Okay, so now we have to balance it. So as we can see that we 9200 and have balanced it. As you can see that you can easily find out how to. Okay, and next we have to prepare a disposal account. So first of all, we know that whenever we are selling our asset, so we have to decrease the asset by crediting it and this debit the disposal account by the cost of the equipment, computer equipment. So it means that computer equipment will be debit. Computer equipment will be carried and disposal account would be debit. Okay, so disposal account would be debit and computer equipment would be carried. Okay, and also we have to decrease its provision account. So as you can see that what we did here, provision debit, disposal credit. That's why we written it here. So disposal credit and provision debit. Okay, and if you see that we have received some money also. Yes. So as you can see that we computer equipment originally purchased on 1st March and maybe for 30 cylinder was sold for 1950. So we received 1950. So it means that our bank would be debit and disposal would be carried by 1950, and we done it here. Cash book and bank would be debit and disposal would be carried by 1950. And now we have to find out that have we earned on disposal or have we maybe loss on disposal, because we also have debit the income statement. If we have a loss on disposal, so we will be debit the income statement, carried the disposal account, and if we earned on disposal, so it means that we will be carried the income statement and debit the disposal account. So how can we find it out? First of all, just find out its net book value. So its cost was 3600 and its accumulated depreciation is 1440. So now deduct this, you have net book value. So 3600 minus 1440. So we have 2160. 2160 is the net book value. Okay, so 2160 is its net book value, and it's we have received only 1950. It means that its selling proceed is less than its net book value. So it means that we made loss on disposal. So 2160 minus 1950. So we made loss which is 210. So it means that disposal account would be carried and income statement would be done. Okay, so we have the next question. Define the following terms, give an example of each. So we have we have a term capital expenditure and revenue expenditure. So first of all, we have to write definition. So what is a capital expenditure? So capital expenditure refers to the funds used to acquire, upgrade, or extend the life of a business physical maintenance. So what is the example? Machine. Revenue expenditure. So RE refers to the funds used to cover the day-to-day operating cost of a business, and the example is salaries. State two ways Pearson could maintain the security of his computerized data. So first of all, we have the how can we maintain the security? First of all, we have the first option, which is antivirus file software and the passwords. Okay, so we have done with this question. Okay, so now let's see question number 16. So state two benefits of maintaining petty cash flow. So first advantage would be efficient management of small transactions and reduction of funds and errors. 7 maintains a petty cash book with a float of 150. The following transaction took place during August 2020. So on 5 August, we paid some employees' travel expenses. So basically, these are the expenses. Okay, and what we have to do is we have to find out the restored the petty cash float. We have to find it out. It is to be calculated. So prepare the petty cash book for the month ended 31st of 2020. Balance the petty cash book on the date and bring down the balance on 1st September. Okay, so if you see that, so first of all, our balance BD was 150 because this was the float. If you see in the question, um, that 7 maintains a petty cash book with a float of 150. So this is our balance BD. And now I just need to fill these expenses. So first of all, we have the employees travel, which is 14. We have to write it in total and also in the travel column. Postage stamps, which is 26.80, and we have to write it here. Fabergé 30 and 30. Parcel posts, which is 45. Taxi fares, and now we have to total it. So this is 125. So cash book balance, our balance is 125, the total of the CD. So balance CD was 150. So it means that altogether 125 plus 1, so 275 would be our balance CD. It means that we have to store the 275. Okay, so this is the answer. Okay, so the next question is state whether interest amount is stored will be shown on the debit side, on the credit side of the main cash flow. Yes, we will be showing it on the credit side because we have to pay this to the petty cashier. State where in the statement of financial position petty cash flow balance on 1st September 2022 will be shown. Of course, in the current assets, because we know that the current asset bank is the part of the current asset. So we know that the petty cash book would be the part of cash book and cash book would be the part of the bank. So that's why we will be showing its balance under the current assets section, the financial position. State two reasons. Okay, so state where in the statement of okay. So second part is that state two reasons why the balance in the petty cash book may be different to the amount in the petty cash box. So it means that there can be two reasons because we have to state only two reasons. So some cash may have been stolen, and the second one would be that there may be a missing voucher. So these are the two reasons behind that. Okay, so we have done with the question number 16, and now we are going to move forward. So this is question number 15. In this particular question, we have to correct the trial balance. The trial balance in 30 September 2022. So we have the draft trial balance here, and we have to correct the trial balance. Okay. So in the first part, we have bank overdraft, which is 4250. So this is right because this is basically a liability to pay. That's why it should be carried. Carriage inwards, this is 480 carat here, but carriage inwards means that this is the purchases return, this is the sales return, so sales return should be debit, so that's why we have to rectify it. Discount allowed is 370. This is right, we don't need to rectify it here. Drawings are carried, but it should be debit. Equity should be carried. So yes, this is right. It is, there's nothing wrong in it. So general expenses, which is 14350 debit. So we this is also right. Inventory at October 2021. This is carried, but it should be debit because we know and the nature of the inventory is debit. Irrecoverable debts. So this is correct here, but we know that irrecoverable debts is kind of expenses for the business, and that is why we have to debit it because all types of expenses and losses have the nature of debit in the income statement. Loan to employee, which is 100 debit. So yes, this is kind of um, you can say that expense for us. That's why we have to write it in the debit side. Okay. So motor vehicle cost, which is 22,300. So this is right. It should be here. Provision should be carriage. This is also right. Premises should be debit. Purchases should also be debited. And rent received. This is the income. So it should be on the credit side. Return inwards. This should be debit. Revenue. This should be credit. Trade payable. This is also credit entry because this is the liability for us. Trade receivable is the asset. So in total, we have this balance. So it, as you can see, that our debit and credit side is equal to each other. That is why there is no problem in it. But yes, there can some problems if the errors maybe would not affect the trial balance. And our part B is all about it. So explain what is indicated if both totals of trial balance are the same. So there is no errors in the books of accounts. However, certain types of errors still be present. It means that the errors which will not be affected trial balance. This can be error of commission, error of omission, error of principal, error of original entry. So state one difference between the error of commission and error of principal. So an error of commission is where a transaction is entered in a incorrect account of the same class, whereas an error of principal occurs when the transaction is entered in the wrong class of the account. State one other type of error that does not affect the balancing of the trial balance, which is the error of omission. It means that you didn't write the entry at all, and that is why your debit and credit is equal to each other. Okay, so we have question number 14. So answer all the questions is okay. So question number 14 is that Bates provided the following information for the month ended 31st October 2022. We have the balance BD. It means the opening balance, which is 68,480. And we have some transactions for the month of October 2022. And we have the current balances, and we have to find out a trade over debit balance to be calculated. This is basically we have to calculate it. Okay. So we have, this is a trade receivable ledger control account. So we know that in this particular ledger, we always write balance between the debit side. This is written here. So sales day book. Basically, this is coming from the total sales from the sales journal, from the sales day book, which is this. And we received basically, this is a balance which is coming from the bank. Just give me 1 second. This is the entry. Okay, so mm, yes, so this is dishonor check. Okay. So this is customers check dishonor, which is 345. It means that we suppose we basically credited our sales ledger control account previously, but after some time we get to know that the check which we received from a customer that was dishonored. So that's why we have to debit it. And that is why, because we have to receive the C45 again from our customer. So that's why our bank would be carried and say that the control account, it means the trade receivable control account would be debit. Okay, so we have this balance CD in the question, but we have to find out. No, this is not the balance CD which we, yes, this is the balance trade receivable as a carried balance, which is 156. Okay, so we basically discount, we allowed some discount. So whenever we are allowing some discount, so discount allowed would be debit and trade receivable would be carried. So that's why we are written here, added here. And this is irrecoverable debt, and this is a contra entry. So irrecoverable debt means, so this is irrecoverable debt. It means that irrecoverable debt would be debit and trade receivable control account would be carried. So that is why 260 is here. Contra entry would be on the carried side, and this is the balance which we receive from a customer, which is 60,940. Sales return day book, it means that this is a sales return, and this is coming from the sales return day book. The balance is coming from there. So our sale return would be debit, and the trade receivable control account would be getted by this amount. Okay, so we have to total it. So total is 125,327, and now deduct all the identity from here. So we have 61,933. So this is the balance CD, and the balance BD is 156. Okay, so we have completed this question. So Bate is concerned about the time she is taking to prepare a trade receivable control account. Explain the benefits of maintaining trade receivable control account. Okay, so control account verifies the arithmetical accuracy of the ledger by reconciling the totals with the total of the individual personal ledger control accounts. This is the first benefit, act as a deterrent to fraud, as it will be prepared for different members of staff to the ledger clerk. Maintaining trade receivable control account resulted in many benefits to the business. Okay, so I guess I have done with this question again. Okay, so this question number 13. That on 1st September 2022, Umar owed Reese a credit supplier, which is 840. So, Umar owed Reese a credit supplier. Okay, so Reese is basically credit supplier of Umar. During the month of September 2022, the following transactions between Umar and Reese took place. Okay, so these are transactions. So purchase goods 640. So Umar purchased goods from the Reese, which is 640. After that, Umar returned the goods to Reese, which is $190. And on 28 September, Umar paid in a full of a balance owing at 1st September 2022, which is 840. So now we have to prepare the account for Reese for the month end 30 September 2022. So Reese basically are suppliers, that's why it's balance BD on the credit side. So when we purchase a Reese, so purchase from the Reese, so Reese would be increased because our liability would be increased because this is the credit purchase. So that's why Reese account would be carried and purchase would be debit. And when we return purchases to the Reese, so it means that Reese would be debit and purchase would be carried. That's why 190 is here. And after that, we basically paid this $840. Umar paid Reese $840. So it means that Reese now decreased because this is our liability. Reese is the liability for us because he's our supplier. We're supposed to pay 840 in the previous date, but we paid this on 28 September. So Reese would decrease. That's why liability would be on the debit side. So Reese would be debit and balance and cash would be carried. So this is how we have to do this. So we balance it 1480 and deduct 1480. Okay. So 48 1480 minus 190 minus 840. So you have 450 as a balance CD. So complete a table to show the books of original entry for each transaction. So our first transaction is that we have purchase of a non-current asset on credit. So this will be entering in the journal. Okay, receive from customer by credit transfer. So we have received we basically receive the amount from the customer. So whenever we are receiving some amount from the customer, so we will be entering it to the cash flow. Return of goods to a credit supplier. So we will be recording in the purchase return day book. Sale of good on credit, we will be recording in the sales day book. Small cash payment to window cleaner, so we'll be recording the petty cash flow. So complete a document where indicated. Okay. So this is the invoice. Okay, and this is the date which is written here. So we basically purchase some bookcases and table lamps from the JD Limited. So we basically purchase bookcase which is 8 in quantity and its unit cost is $28. So 8 multiplied by 28, which is 2240. And we purchase table lamps which is 24 in quantity, and the unit cost for the table lamp is 650. So multiply 25 with 24 with that is 6.50. So we have total cost for the table lamps which is 156. So altogether its subtotal is 380, and there is a trade discount of 20%. So multiply 380 with the 20%. So you have $76 as a trade discount. So it means that total you have to pay 304. Okay. So question number 10 is that identify how income received in advance would be shown in the statement of financial position. So income which we received in advance, so that would be our liability, our current liability, and we will be showing it in the other pages. So option C is the right option. Okay. Question number 9, identify which error would be disclosed by the preparation of the trial balance. Credit sales 500 and then the both side of ledger as 50. So if on the both side it is 50, so it would not be it would basically balance it would balance, because on the both side written 50 is written. That is why. So this is not. B, discount allowed $60 post to the credit side of discount allowed account. Okay. So discount allowed should be debit, but we posted it on the credit side, so it means that our credit and debit side would not be equal. So B is the right option. But let's see the others. Purchase account and sales account both overcast by 650, because both overcast by 650. That is why it would not be uh, creating any problem. So purchase and carry 290 omitted from the sale. So if this is omitted, so it means that there is no entry not on the credit or neither on the debit side. That's why this is not disclosing any error. Return inwards, $150 was posted to the credit of return outwards. Identify how this transaction would be credited in the books of accounts. So return inward 150 was posted to the credit of returns outward. Okay. Identify how this transaction would be credited in the bank's books of accounts. Um, okay. So basically, our return inwards means that this is sales return. So sales return should be debit. So we have to debit it. And but we posted it in the return outwards. So return outwards would be carried. So that's why we have to debit it, because we accidentally increase return outwards. We should not do that. We should not have done this. That is why now we have to debit the return outward account. So this is that outward account. So it means that on the debit side we have two things, and on the credit side where there is nothing, there would be suspense account. So on the suspense account we have altogether 300. So option A is the right option. Identify why a business depreciates in non-current assets. To know the profit or loss on disposal, no. Because if you want to find out the profit or loss on a disposal, so we have to find a difference between net book value and sales proceed. To know the value at the end of its useful life. To know the value at the end of its useful life. So no, basically it is not the right option. To provide cash for its replacement, it's not like that, because sometimes maybe we made loss, so we are not receiving the amount for the replacement of it, replacement for the sold asset, to spread the cost over its expected useful life. This is the proper definition of depreciation. Identify which item should be entered on the credit side of the trade payables ledger control account. Okay, so identify which item should be entered on the credit side of the trade payables ledger control account. Cash purchases. So cash purchases would not record in it. Credit purchases. So yes, credit purchase would record on the credit side. Discount received would record on the debit side. The return outward would record on the debit side. So B option is the right option. Identify which is not a principle of professional ethics. Okay. So confidentiality. This is the principle, not principle. We have to find out that which is not a principle of professional ethics. This is the principle of ethics. This is not this is the your accounting concept. This is not a principle of professional ethics. Inventory should be valued at lower cost net realizable value. Identify which accounting concept this is an application of. Okay, so this is basically prudence, because prudence says that we should record our expected losses first earlier, and we should not record our expected income. So this is the D part is the right part basically. Identify which is the reason of offering a cash discount. So this is very easy, that our customer should pay us promptly. Identify which of these accounts always have the credit balance. Okay, so carriage inwards would be debit balance. Okay, this is also because we basically when we, yes, so discount received is basically have the carrot balance always. So identify which statement is correct. So this is very easy. Basically, assets is equal to liability plus equity is not is incorrect. Okay, this is the right option. Equity is equal to assets minus liability. This is also right. Equity minus liability is equal to no. This is not right. Liability is equal to assets minus. This is also right. So it means the C option is not is incorrect statement.